We have JC Parets on the line. He is founder of Eagle Bay Capital. JC is a money manager, chartered market technician, technical analysis practitioner, and blogger. He joins us every Thursday to give his colorful and animated outlook on the market. JC, how you doing this morning?
Now that's an introduction right there. Doing well. How's it going?
There wasn't even time for small talk. Sorry about that, JC. There's always time for small talk with JC.
I'm totally just kidding. You know me. I'm all business. Come on. All right,
JC, do you want to get your thoughts on Merck here? That's what we were just talking about before you came on, and we were looking at Merck. And the last couple of days here, I was saying I was having deja vu because 2 days ago, we opened up on some drug news and got up to 59.70, and then yesterday they opened up on a buyback of $10 billion, got right up to the same point again at 59.70, and gave it all back again. Obviously, a lot of that was market related. What are your thoughts here on Merck? Because this is one pharmaceutical company that hasn't really participated in the recent rallies. We saw Pfizer make new highs recently. We saw Eli Lilly of the big pharma making new highs recently, but Merck hasn't participated. What are your thoughts here on MRK?
There's a good reason why Merck hasn't participated. In fact, if you go back, we've been struggling since last year from the highs from 2007. So we're at historic resistance levels that we really haven't been able to break through, while some of the others don't necessarily have that problem ahead of them. So Merck, in my opinion, has been dead money for a while. You guys know one of our Marketfy packages is all 30 Dow components. So I'm constantly looking at Merck on multiple time frames, and it's just been a no touch. From week to week, my commentary doesn't change. Just stay away. It's dead money. Bigger picture. And then short term, you have a flat 200-day moving average and a flat trend from the past year. So it's dead money. There's no reason to mess with this on the long side or the short side. It's literally priced right at a flat 200-day moving average. This stock could not be more perfectly priced, in my opinion. So it's dead money for sure. From where I sit.
JC, let's go to the market here. And boy, we had that quad witch on Friday. Got right near all-time highs, and I think everyone and their brother was leaning, okay, we are just going to blast here through all-time highs, and we failed. And now we're coming back down here. Big sell-off yesterday, big sell-off overnight. Coming down to me, I know you don't look for exact numbers, but to me we're coming down to a very significant level, bottom of the trading range here in the S&Ps at 20, 30, 75. You think this is just going to be the scenario that we've had basically since the beginning of the year? The buy the dippers are going to come in at the support level and take us right back up to all-time highs.
Well, remember, when you talk about the market, right, in this case you're referring to 500 stocks, right? You're referring to the S&P 500. But I think you got to look beyond that, because the Russell 2000 did make all-time highs. The mid-cap 400 did make all-time highs.
Okay.
The micro-caps did make all-time highs. So, when you talk about the market failing to make all-time highs, a lot of stocks and a lot of the major indexes did. S&Ps did not. NASDAQ 100 did not. Transports didn't even get close. So let's just put things in context first. As far as the S&P 500 is concerned, it's a match. We're not above the December highs, which is really our level that we're watching. I think that based on the action that we saw, and to your point, we were unable to make new all-time highs. Quite frankly, if you ask me, I figured we would. We took a lot of money off the table last Friday because a lot of things hit our targets. Things that you and I have been talking about. Healthcare, for example, we've been long for a while, hit our target Friday. Russell 2000, for example, we've been long for a while, hit our target on Friday, that 161% extension that we're constantly talking about. Did I know that we were going to crash this week? Of course not. But when things hit your target, you get out, and then you look at a day like yesterday, Dow down 300. It's like, nice, good thing we took profits, right? So, in terms of the averages themselves, like I said, I think it's going to be choppy. I think it's going to be sloppy. The fact that prices in February broke out above the fourth quarter highs and then broke down, and then we were able to get back above it and then broke down again. All this indecision, all of this, up and down, above and below, support and resistance, I hate that. So, and quite frankly, I don't really trade the S&P 500 anyway. A smart guy once told me, if you trade the averages, you get average returns. So it's something that we look at, obviously, But not really something I'm too concerned with because again, I don't trade the S&P 500, and if I did, I'd be staying away from both the short and the long side. Where can we find support? I wish I could tell you. 2010 looks like a solid support level. The problem is if we do get down there, technically we're putting in not only a higher low like we did last week, but now a lower low. And by definition, that is a downtrend, right?
JC, your volume's coming in and out here a little bit. Are you? Is there any way you can turn up your volume or you get closer to your phone? Or are you on a Skype phone or?
Yeah. How about now? How about now?
A little bit better there. So yeah, a little
perfect.
bit better.
Yeah.
You were just quiet. I can hear you
Sorry
okay,
about
but no problem at all. Biotechs here. We've really seen the biotechs turn in the last 4 days. I was mentioning it actually coincided with the quadruple witch, which a lot of times historically you do see those as turning days, and it seems like the biotechs all turned on the quad witch day last Friday, and they've just been in a significant sell-off ever since here. What are your technical thoughts on the biotechs?
Yeah, obviously hindsight is 2020, but I got to tell you, Friday it was an easy short. We shorted it very, very aggressively on Friday. When you see something like this, it's parabolic, gapping up, okay, regardless of quadruple witch or not, but I would say, especially on a Friday, gaps up and then fades all day, it really doesn't get more bearish than that. Not to mention, anecdotally, everybody had caught on that biotechs were on fire. It wasn't a secret. I don't watch TV or any of this stuff, but I watched the Twitter stream and I could see all the headlines and everything is about biotechnology. So when you have that euphoria in the media and then you have price action like that, that is, if that's not a top, then I don't know what is. But more importantly, from a risk management standpoint, it becomes so easy to trade that because you have your pivot point. You're only short below that level, right? That Friday high level. So it really became an easy short. We continued, followed through Monday, Tuesday, and then yesterday you got the swoosh, and we covered our shorts yesterday. Could we keep going lower? I think we probably do. I think we probably head down to 205. That was former resistance, earlier in the year. That's also the 38.2% Fibonacci retracement from the October to March rally. So I think that 205 level's key. I think that's probably where we're headed. I didn't see what it's doing pre-market. Let's see. It's, I guess it's not really doing much, but we covered yesterday. But I think it's probably going lower. A lot of people need to get hurt in this thing. There were a lot of people that were just, kind of chasing momentum. And, this is the way that the market cleanses, that sort of behavior. And I think it's great. I think it's fantastic. I hope it does lower.
Okay, let's take a look at the big dog, Apple. Kind of been in a trading range since the iWatch came out. Apple Watch had a weekday yesterday, traded down $1 here. I know you've been out of this for quite some time. You've been looking for a re-entry point on the long side. Is this 121.50 area going to be something you're going to keep an eye on?
Nah, probably not. You and I, we talked about this in February, how we wanted to buy that breakout above the late November highs, and we had a target of 129, and this was for multiple reasons. It was the 161.8 extension of that consolidation from November, and it was also the 168 extension from the entire 2012 sell-off. So, that was a big level, that 129. So, we talk about it every week. We took profits at those levels. There's no reason to be long, and we wanted to wait for more time for it to digest. We'd prefer to see a sideways correction and then maybe buy a breakout. I told you guys I did not want to buy a dip. That would be a sign of weakness. And that's what we're getting. We're getting dips. So this isn't for me. I think it's a mess. I don't like the action. And that's why that's why we have price targets, and that's why we respect them. Not only has Apple gone nowhere, and you have risk of losing money, again, it's opportunity cost as well. That's money that could be allocated elsewhere. That you're just sitting there once targets have been hit. It doesn't make any sense. I wouldn't touch it.
JC, I want to give you some props from last week because last week you were on the show. You were really bullish with social media stocks, and they had a fantastic 3-4 days there. We really seen a run up in Facebook. We really seen a run up in Twitter, kind of a breakout on Twitter. Yesterday, though, we kind of had a reversal in some of these stocks. There, is that concerning to you? Are you still bullish social media? You buying yesterday's pullback here, or are you concerned that we may have topped out actually yesterday?
I don't know that we topped out. I still like the sector. I will tell you, I did do a lot of selling. When Twitter made that move, I got out of all of it. Facebook also hit an upside objective. I think big picture, I still like it. I don't see any reason to be like, oh my God, all of a sudden everything's changed. But Facebook did hit a key extension, so I would expect some consolidation. The social media sector itself, SOCL, broke out above a downtrend line, from last year's highs. So as long as we're above that downtrend line, you call it the 200-day moving average as well. As long as we're above that, it's fine. Below that, we don't really want anything to do with it. And then look at a name like LinkedIn that's been really consolidating over the last couple of months. We want to be buying a breakout out of this. While it's in this consolidation, and yesterday was an ugly day, there's really no reason to be in it. But if we can break out of this consolidation that we've had since February, I think that would be extremely constructive. I think at this point, with the market being really sloppy, I think you got to be in non-correlated names. Those kind of names, Facebook, LinkedIn, and social media stuff, they tend to have some higher correlations with the market. I'm looking at, a name like GoPro, that we've discussed, right? GoPro looks very interesting. We talked about it last week. It broke out. As long as we're above that downtrend line, from the highs last year, I think we could be in it. I think it's gapping up a little bit not gapping up, but it is trading a little bit higher pre-market with the Dow getting killed. I just want to note that GoPro has shown a lot of relative strength in the last few days and a very, very low, if any, correlation at all with the market as a group, which I like, especially in this environment.
Want to ask you about a couple stocks out of the chat here, and probably just give us your expert chart analysis here. Let's take a look at CRZO. It looks like it's trading up here in the pre-market. Any thoughts on CRZO? Cabot, Carrizo Oil and Gas.
Yeah, the stock's trading below a downward sloping 200-day moving average in a downtrend. You have a lot of overhead supply, in the low 50s. Sure, could you get a little bit more of a mean reversion, towards 53 or something like that? Sure. Is it worth the risk? In my opinion, I don't think it is. It's in a good sector at this point. I like it. I think oil goes higher. So these names should benefit. Look at a day like yesterday, the market's getting killed. And, all these, oil and gas related names, the E&P names were up, the integrateds were up. So I think that it's the right space. I do like it, believe it or not, but there's just too much overhead supply. Why would you mess with it?
Okay. And one more, we can also talk about the deal for Kraft yesterday for Heinz. Really a complicated deal there, but certainly Street took off with it. But let's take a look at SJM, Smuckers. Smuckers Jams. Trading down here in the pre-market, I see, but then it came right back up. Any thoughts on this chart?
Yeah, it's getting. No, I guess it's not. I guess it's not really doing much pre-market. The Smuckers, we're bumping up against that resistance from 2013. Call it like 115 area, something like that. So until we can get above that, I find it hard to get long, but I will say I do like the way it's been consolidating, really since early February. I think some further consolidation, I would be wanting to buy a breakout. What I like about this name is that it's so clean, right? The fact that we're right at this resistance from 2013, that's our level. Once we're clear above all of that, we want to be all over this because we're in uncharted territory, and that's great. And that's when we can see major moves. So what I would say from this one, I think it's fantastic, most importantly because it's easy to manage risk. Because once we buy it at all-time highs, we only want to own it above all the former overhead supply. So from a risk management standpoint, which to me is the most important thing, it becomes very clear. So that's what I would say. I would buy all-time highs and keep buying. Totally. I like it.
These food stocks here, let's just stay with this sector here because we had the deal with Kraft. Some people speculating, there was even a Bloomberg article here this morning speculating that General Mills, GIS, could be the next one, potentially Kellogg's. Some of these are trading up. GIS actually is trading up here in the pre-market, probably off that Bloomberg article here. First of all, do you like the food sector now that we've seen this Kraft deal? And secondly, sometimes food can even be defensive, in a down market. We've obviously seen correlations over the years where food can actually move up in a bad tape. Do you like the overall food stocks? He said he kind of like SJM. What do you think of like General Mills and Kellogg's?
What's the ticker of General Mills?
GIS. GIS and K.
Yeah. Again, the General Mills overall structurally looks great. The short term, with a flat to downward sloping 200-day moving average, I think it's tough to get, for them really to get a sustained rally. I find it very difficult to see that. So I wouldn't mess with that. As you guys can tell, I really respect, flat and downward sloping 200-day moving averages. I mean, it really, really helps me out a lot. I would say the same thing with Kellogg. Prices are below a flat to downward sloping 200-day moving average. I mean, to get a rally on something like that is really tough. So to me, I think you're fighting a trend, and that usually doesn't end pretty.
JC, just closing thoughts here on the overall market. We've had a significant sell-off here in the last few days. Obviously, a lot of money's coming out of the momentum stocks. The buy the dippers have been relentless here pretty much for the past 5 years. Do you think the buy the dippers just come back into this market here again, potentially today or over the next couple of days because stocks pull back 2%? Doesn't that mean they go back to all-time highs in the next few days?
Generally, yes, but I will say that I do not like that that S&Ps did not make a new high. I really don't like that at all. Qs didn't either. The trannies didn't even break out. I hate that. So, and I've been really bullish. I really have over the last 2 months. I've been pounding the table bullish, and fortunately because it's worked out in our favor. But when a market sets up for a particular move, and in this case, I think that the market was set up to go higher in my humble opinion, and it didn't. So when you have a bullish setup that really resolves itself in a negative way, the market is speaking, and we have to listen. I got to tell you, I have a huge cash position, since last Friday. So we have very minimal exposure at all. For me, you guys know I'm more intermarket and global. I'm kind of looking outside of the United States. I think crude oil, we've been buying crude oil since late last week. I still like it. I think it goes higher. And I think Russia is going to benefit. You have all these idiots telling you that crude oil and the S&P 500 move together. That's just a lie. When you see these headlines and, saying that stocks are up on crude oil stabilizing, that's just nonsense. Crude oil and the S&P 500 have zero correlation. Literally zero, less than zero. One has nothing to do with the other, and I thought yesterday was hysterical, the fact that these idiots keep telling you that they move together, and then yesterday the Dow's down 300, and oil's ripping in their face. I mean, that just made me so happy, and I think you're seeing the exact same thing this morning. So the fact that the S&Ps are not correlated to oil is worth noting, but Russia is. So, not all stock markets are created equal. I think if oil can keep rallying, I think Russia can get a bid, man. I really do. And it's hilarious because I've hated Russia for so long for obvious reasons. And if you can draw a downtrend line in Russia from last September's highs through yesterday, we're trying to poke our head above it. And I think if we break out, we can get a nice little mean reversion in Russia. So that's what I'd be looking. I'd be looking outside the U.S.
Okay, we've been on the line with J.C. Parets. He's the founder of Eagle Bay Capital, money manager, chartered market technician. He joins us every Thursday at 8:35 to give us his commentary on the market. J.C., great information as usual. Have a great trading day. Good weekend. We'll talk to you next week.
You too. Thanks again for having me, guys.
Thanks, JC.